DocuSign is down 27% year to date and 87% from its all-time high that was registered just 2 years ago last month. Guys, I have to talk about this over and over. When I hear people say, Paul, a stock will never drop that much, we're in the moment when we saw this happen. And I'm not saying we predicted this, but what I am saying is it can happen to anybody. It's happened to Google, Nike, Amazon. They've all fallen big number, even Microsoft, off their all-time highs. So in this video, we're going to go over DocuSign. We're going to go over the high-level metrics. We're going to cover some news on them, analyst estimates, of course, our 8 pillars. We're going to go to our community and read the bull and bear cases for DocuSign. And then we're going to finish it off with probably the question you're asking the most, which is, well, what's the right price to pay off for DocuSign? So let's get into it right now. Now, guys, I'm actually very interested in DocuSign, and you might be surprised by that because of one thing. There's a negative PE, basically means no PE, and they don't show any profit. But here's what I love about DocuSign. Free cash flow. They generate free cash flow. Remember, these net income numbers could be affected by write-offs and depreciation of their software. The free cash flow doesn't get affected by those things. It's already factored in there. They're generating high levels of free cash flow and it's increasing. That's what I love. I'm going to focus on free cash flow. Now, you might sit there and say, okay, great, Paul, but is there anything else? Another big metric, price to sales ratio. When it comes to software businesses, price, you want to compare them to each other. Here's what I love about, they have a 79% gross margin. This means every extra unit they sell, 80 cents of it almost goes as pre-tax profit. That's an incredible number. That's higher than Microsoft, and that's higher than Palantir. That's higher than Google. This is an incredibly profitable business. Now, the question is, what do they do that you can't really get from Google Drive or Microsoft OneDrive that makes them unique? That's the question you have to ask yourself. So I'm looking at the income statement here to look at their revenue numbers. Okay, they jumped up a lot during COVID, makes sense, but they've grown consistently. Now the growth has slowed, but let's go check them out quarter to quarter to see what's going on with their revenue. So July 2023 did it 687. July 2022, 622. Okay, so they had growth here, about 10%. March of 2023, 661, 588 in the same, April in the same quarter of 2022. Growth there. How much? Another $80 million on $580 million bucks. So the growth is slowing. And again, my biggest question about DocuSign is, how do they different than somebody else? Now the question is, if they're cheap enough, could somebody buy them? I mean, look at their market cap right now. Their market cap is $8.5 billion, and they generated $550 million in free cash flow. Guys, I got even better news. I was screwing up DocuSign with Dropbox. This shows you how live this is in person. Guys, this is even better than I thought because I love DocuSign. I use DocuSign all the time. Anytime someone sends me a contract and it's not on DocuSign, I'm like, what are you doing? You want me to sign this and then fax it back to you or copy it back to you? This is stupid. I mean, literally, am I wrong?
They want you to fax stuff.
They'll come around, the courts. It's stupid. DocuSign, guys, I'm so excited. I just realized this. I was thinking Dropbox the entire time. I'm like, Dropbox. DocuSign, I freaking love. Nothing makes me happier than using DocuSign. This is even better. So make fun of me in the chat right now for not even talking about the right company. This is even better. I'm actually surprised the growth has slowed that much. Let's check out the 8 pillars here. Look at that negative PE. They increased shares outstanding. Let's see how that's going. So guys, they've increased their shares outstanding. Now it's slowed down quite a bit, but it's still up there. That's quarter to quarter. Those are big jumps on quarter to quarter basis. Let's see annual. Let's see the 4-quarter basis. 184. Oh boy, a lot of dilution happening. It has slowed though. So guys, that's gonna be my initial reaction on DocuSign. Those are some ugly increases in shares outstanding. But look at their cash flow, guys. Look at this cash flow every year. 300,000, 63 million, 61 million, 134 million, 366, 440, 547. Look at their cash from operations increasing every single year. That's incredible, guys. That's incredible. To me, I feel like DocuSign is the leader by far in online document signing. I don't know. He's asking, is it a verb yet? I don't know. I don't know if it is. It's not like Google it or something like that. I don't know. But either way, DocuSign's been I've received a few other small ones, but DocuSign has been far and away the best one. And to me, Adobe would be a great company to buy DocuSign. And the question you have to ask yourself is, could they increase their free cash flow if Adobe spent $8.5 billion of their tons of cash flow buying this company and incorporating it into their model? Could be. So let's go see what analyst estimates are for DocuSign. $2 a share now, going to $4 a share in a few years. So good growth. Not as I thought it would be, but good growth. Revenue growth, 2.5. So the growth is definitely slowed, guys. They're showing high single digit growth for the next 4 or 5 years. Not as good as I'd have thought. Let's go check out our community and see what they say about DocuSign. So I'm pulling up our chat. We have a chat for DocuSign. So Dalton, our in-house analyst, says 2 bull cases. Free cash flow increased 74% in the recent filing, while revenue increased 11%, with international revenue increasing 17%. Okay, so international is growing. Management believed its total addressable market to be $50 billion and has partners such as Salesforce, Microsoft, SAP, Google, and ServiceNow, and has grown customers from 400,000 in 2018 to 1.3 million today. Wow. They have 1.5 billion in cash versus 725 million in convertible notes. That's awesome. And it increased its stock repurchase program to 500 million, which I like because of how low the price of free cash flow is. So let's go look at this. What was that metric I want to look at right here? Oh yeah, let's go look at their balance sheet. So balance sheet, total current assets, $2 billion, especially cash and cash total receivables. Total liabilities, 2.4. So they can almost pay off all their debts with just the cash on hand. And they're easily converted to cash. That is awesome. And on top of that, they have an extra 1.3 billion in long-term assets. 900 million if you take out goodwill and intangibles. That's awesome. All right, what else they got? Bear case. While DocuSign currently holds 55% of the total e-sign market, Adobe is its biggest competitor with 11.75 and growing with Adobe Sign. Okay, so if they're growing like crazy, that's a concern. Question is, does Adobe just skip it and go, listen, we're going to buy DocuSign. The stock is down a ton. Let's go buy them. And now we'll own 67% of the total market. Might make sense. Let's see. Regrettably, I used to own the stock and lost money, so my bull case is now that I don't own it, it will be soaring. So listen, there's not a lot on this one in the community, probably because, and to me, I like that because it says that people aren't really watching it. So it could be under the radar as a potential play. But I do love the fact that their price to free cash flow with a very fast increase in cash flow is a lot lower. So the question is, what is the right price to pay? This is why we use our stock analyzer tool. Now, before I get into that, as you've watched our videos, you've seen me talk a lot about our community and use our community and our software. So here it is. I'm not asking you to make a yes or no decision today on getting the software in the community. What I'm asking you to do is to make an informed decision. And you cannot possibly make an informed decision on the outside. You've got to be on the inside. Just like if you wanted to test drive it, buy a car, you got to go test drive it first. Spend 15 minutes taking it for a test drive before you buy it. Same thing here. The difference is I'm offering you a 7-day free trial full access test drive, not 15 minutes, 7 full days. If at the end of those 7 days, you see the value in your long-term thinking and how it's going to help you make better decisions financially, sign up. If at the end of 7 days, you don't think it's worth it, no offense taken, move on, keep watching our videos, keep learning. Now may not be the right time for you. But as I said, making informed decisions is what's most important for me today. I want you to go in there, use the software, use the community, engage with people, and determine if it's the right step for you. So if it is, go to everythingmoney.com. Sign up right now, 7-day free trial. All you need is an email address, no credit card required. Go sign up and take it for a test drive and say hi to me once you join in our community, in the general chat. So 10-year analysis on DocuSign. When was the last time I did DocuSign? September of 2022. Okay, look at that. So let's look at my assumptions from September of 2022. I did 7, 11, and 15% revenue growth. Let's alter this a little bit. Let's call it 6, 10, and 14%. Profit margin. Guys, we didn't know the profit margin. There hasn't been profit margin. So I just assumed 10, 17 and a half, and 25. Because I'm really going to focus on the free cash flow here. The free cash flow, I put in 13, 19, and 25, which I still feel good about because since September of last year, the free cash flow has been at the high end of that metric, closer to 25 than 13. So I like the fact that the free cash flow is growing here. Now, for PE and price of free cash flow, I put 14, 17, and 20. You know, Adobe is clipping at the heels. So maybe I want to be a little more conservative here. And this is been a year later. Let's call it 13, 15, and 17. Because remember, I think this is an acquisition play at some point. I think this is a company that at some point, Adobe or somebody else that wants to be a big player, you saw all the people they partner with, Microsoft, SAP, maybe one of them will want to buy them. So that's the way to keep track of this. So I do think I want a little bit of a discount if the low side happens. I can understand even going lower than this. So I'm putting 13, 15, and 17, but here's where I get my return. Desired annual return. Guys, I think there's a lot of unknowns here, so I want a big return on this company. 15, 18, and 21%. This is my margin of safety. I can get 9 or 10% from investing in a long-term ETF, and I'm putting 15% return required. I want a 50% premium in the market to invest in this company. Why? Because I think by itself, it's a great product, but it's easily replicable, and Adobe is nipping at the heels. So I really want that return. So guys, I'm gonna hit the analyze button. Just stick with me for one more minute longer, because I really want you to understand what I'm doing here. I'm trying to teach you how to fish and not just give you answers. So I wanna explain these numbers. That way, when you sign up for the free trial, you're able to sit there and do the same thing on your own without us holding your hand. Boom. Okay, low price of 15 to 20, high price of 51, a middle price of 30. Now, here's the good news. If you pay today's price and the low assumptions occur, 4.3% return. If the middle assumptions occur, it's almost a 15% return. The high assumptions occur, 24%. So guys, for me, I'm actually going to set it on it's actually pretty close to the middle. I'm going to set it on my watch list for $35. Doesn't mean I'm going to buy it. It just means notify me on the computer, over email, on my phone app. That way, when it hits 35, I can start to do more research and decide if I want to buy the stock. So guys, everythingmoney.com, free 7-day trial. Go sign up now.